Bang! Don't test my activeness, boys. Don't test it. Tell you what I've done this morning. So the time is 10:38 as of time of recording. I've done my cardio session, 30 minutes on Stairmaster at level 10, and a 30-minute swim, and full lower body stretching. That takes about half an hour as well. Then I did some fucking business revision, and now I'm filming this video. So this is the video. I didn't actually post on the socials that I was taking this trade because I was at the gym with my mate and we were like, yeah, this is a good position. We're going to take it. Obviously, we were forming lower lows, lower highs. Everything was telling me let's short. We identified the 4-hour Fabay gap here. As we can see, we were like, okay, going to take entry at the top of the Fabay gap. And then stops above, I put my stops above this high here, my mate put his stops here, running tight stops, and we were like, okay, I'm going to swing this, and he's going to go in for a short position, like a shorter time. As we can see, we took another row. Let's jump on 15-minute. We can see price actually reacted quite nicely out of, it wicked us in, and entered us in with the limit. It actually had an initial quite a nice reaction. And I was pretty confident when we saw that reaction. We kind of got, we just didn't get the close underneath this low. That's the only thing that I was just like, all right, this is probably going to come higher up. Test this high here, which is why I have my stops above this high here. I was like, all right, we're going to sweep this high and move back down. And as we can see, we swept the high, formed a downwards candle, then just kept on going, and we actually swept this high all the way up here. And then as we can see, we've come back down, and what I did expect is for price, if we look at 4-hour, we've got the 4-hour price closing outside of this daily Fabay gap, but I do still think we're bearish in terms of macroeconomics. And if you have a look here, we can see all the yields and how that is showing sort of financial stress across the globe. So this is the 30-year. Let's just go on the 10-year yield. So this is the 10-year yield for GBP. This is the 10-year yield for the US. This is the 10-year yield for China. It just looks cooked. This is the 10-year yield for EU. Now, what we can pretty much see is just in general, the last sort of couple months, we've had a real big increase in yields. And as yields go up, investors sort of look to sell assets, because it becomes too expensive to borrow. So as we can see, we're selling, what I think is we're going to be selling off assets, and obviously assets including gold. So I do still think we're bearish. At some point we failed to close above this sort of area of resistance here, and we formed a nice reaction out of it. So I do still think we're coming down to maybe even coming, this would be a big move, but maybe not this far, maybe filling this daily imbalance here, or at least, because we've closed way below this, we closed below this high here, and we closed below the 50% mark on the FEG. So I do think we're still coming down. We sort of tapped into this 4-hour area of sort of consolidation here. But yeah, that's my bias. That's the trade recap. Again, pretty much same as yesterday. Same as it was just yesterday, 2 days ago. Same as 2 days ago. In the other trade recap that dropped yesterday, wicked out straight to TP, wicked out, and I imagine this probably comes down to take some sort of TP here. Got TP1 was around here somewhere, TP2 isn't around here somewhere, and final TP is here, and break even is about here. So listen, it is what it is, and this is what the account's saying now. We're really in the mud nowadays. Really in the mud. Let's put a pin in. There we go. This is what we're looking like. It's looking quite rough. We've only got 2.5% left in us, pretty much, until we blow max drawdown. But like I said in the other video, I really don't care like at all about blowing this account, as long as I blow it following my rules, because the account costs 20 quid. And as I said in the video yesterday that I posted, and videos before that, it is less than a 3-5, guys. Like, that's not deep. The money you're losing on this account, like, it is not deep. Like, I've been on this account for what, like well over a month, like almost, I think almost 2 months now. If you go back and we custom this to February, look, you can see that I started the account. I started the account on 24th of the 3rd, so I started it pretty much the end of March, and we're halfway through May, and this is where we're at. But I've been on this account for a while. I don't really care if I blow it. I probably won't be getting another one until A levels. I'm just going to trade demo, get back on good psychology, and I'm going to do shed loads of back. I think what I'll do is I'm going to cop on demo and do a shed load of back testing, because I want to sort of develop a more like mechanical model to help with sort of just taking unnecessary trades. Because I don't really take unnecessary trades, but everything about the way I'm trading isn't timed right. Like, this is a prime example. Trade not timed right. I should probably like have seen it actually wants to sweep these sort of higher highs and then move down. Same as this. I was like, I need to stop anything. I need to stop using imbalances to take entry. Instead, use them as a place for price to draw towards and through, because in essence, price does draw to higher highs and lower. It draws to lows and highs, and this was a high, and this was a high, and I didn't even sort of think about that really. I used it for stops instead. I should have been using. That's what I've been doing. I've been using highs and lows as stops instead of actually where I should be entering from, because I was thinking about it while I was on the Stairmaster today. Like, if I took entry at a liquidity point and then put my stops above another liquidity point, it could look something like this. Like, it would look something like this, instead of what I've done, where I've taken entry at the end of an imbalance and then put my stops above a place where price actually wants to draw to. So I'm pretty much just asking to lose and then win. Because my bias is normally right. Like you can see here, bias is right. Bias so far is right. And if you look on German 40, I cooked the okay, I got rid of all of my charts, but I've been cooking German 40 since like time ago. I pretty much caught all of this move, but everything I called the move to higher, but everything about the way I traded was just wrong in terms of my entries. Like, the entry is what is really doing me over right now, and that's why I think it's going to be good to sort of get off of the funded, lock in on demo, back test, and sort of develop a sort of a model or way of, or time. So maybe I'm thinking more like time-based trading, more sessions. So that sort of eliminates any errors about sort of entering in at the wrong time. Like, I can only enter a trade in a certain session, whether it's the macro of a session. And I'm going to drop a video soon on the best times to trade, but I might sort of develop that and we'll see how it goes. But at the end of the day, listen, like, it's 20 quid funded. I don't really care. Like, in all honesty, I really don't care. Like, yes, I'd be annoyed if I blew the account from doing stupid shit, but like, I haven't risked more than 1% on any trade, like in any trade on this entire account. And I've had like, how many trades? Number of trades, 27, and I haven't risked total lots used 1. I haven't averaged lots of 0.05. Like, just my biggest loss was $77, which wasn't one position. Which wasn't one trade. That was like 2 layered trades or something like that. So listen, it is what it is. But I want to see how this plays out, and I'll let you guys know what happens with it. But yeah, just make sure, drop a follow, check out the Instagram, check out the TikTok, and remember, best time to start trading was yesterday.